Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I presented on Monday, 1st of August, the Asian Session Live Market Analysis webinar. At that time, I had given the forecast for the entire week, including today. Today, we are on 5th of August. So I will try to review the forecast, what I had given it on Monday, and find out whether the market is moving in tandem or in line with that of the expectations of the forecast or against. So between 5 and 5:30 GMT, we'll review the market. And also, if you've got any questions or any clarification you need, you can ask the FX Street live video window, and I'll be willing to answer to those questions. The forecast is a statistically derived forecast using a specific algorithm. That means a sequential statistical analysis. With the help of that, I've been giving the forecast. And you know that those who attended yesterday during the BOE interest rate decision, that the forecast was expecting a downward move in the case of GBP and Euro, and they did it, and which has given the important information for us that the forecast is highly reliable. So once you find that forecast is highly reliable, then you have to fine-tune the forecast using the market trading in order to make it as accurate as possible. Then still, there might be an element of risk involved in that forecast. So in order to eliminate the risk in trading, we have to use the trading strategy. So now you will be able to understand that the forecast is important in order to take a decision whether we have to do a buy and sell trade or a sell and buy trade. Then in that, what level we have to enter, at what price we can exit, etc. We have to do it using the market reading technique. Then finally, still, if the forecast, the market moves against the expectations of the forecast, then obviously we have to use the risk limiting factor, namely the trading strategy. So this is how my trading system goes. And those of you who want to follow that, you have to follow all the three. And then you will be able to find that consistent profit-making opportunities available for you. So ultimately, we have to get rid of the market fear. And for that, we have to make our understanding of the market more decisive making. Thereby, we don't get confused, we don't develop uncertainty, or we don't say that if the market goes up, it can go up to this. If the market comes down, it can come up to this. Then still, it is nothing but a uncertainty with a range. And that is not of no use. And we will not be able to use any sort of such ideas for our trading. Because invariably, we will come to the conclusion after that it is better for the market to settle down, and then later on we can take a position. But once the market settles down, then if you take a position, it does not make much of a move for you to book profit. Then it becomes frustrating and it tests your patience. And again, you come across the emotional stress. So ultimately, it is a question of driving a vehicle on the road. So when you are on the road, then obviously you cannot expect that the road to be free of traffic. Then only I'll be able to travel. Probably if there is a case during late night hours only, you'll be able to use the car and go around. At that time, all others will be sleeping. So you have to learn to maneuver your car when the traffic is there. And so we should not get afraid of the traffic. And we don't really, once we learn the art of driving, we don't really become afraid of traffic. And we are able to maneuver and just to reach our destination. Sometimes we talk to somebody or over phone and things like that. You got a friend who is sitting next to you in the car, and you might be talking to him. You won't be knowing how exactly you reached the destination. You just involuntarily drive the car and reach the destination and reside. And later on, you realize that you have been driving for more than 30 minutes or 40 minutes. It happens. So once you become habituated to that of the driving and developing the road sense, then you don't get that market fear or the road fear. In a similar way, trading is an art. So you have to learn it and perfect it. Once you perfect it, and once you find what are the possibilities in the trade and how exactly I'm going to limit the risk, how exactly I'm going to maximize the profit. So both ways, if you analyze it beforehand, then the market move does not give you any surprise. And as a result, you don't become emotional trader, because only those who are emotional lose money in the market, not others. Then this is the forecast what I have given it. And you know that they have been gaining levels on Monday and Tuesday, holding high, slowly started making the slide. And also yesterday, after the BOE interest rate decision, they made the slide, but they did not firm up. That shows this is what the market reading comes to play. So once you find the slide happened during the European session, it was expected to gain, but Euro and GBP did not gain. That indicate that higher level long holders are still waiting to book profit and they are not liquidating it. So invariably what the players will do, they will make one more shaking by making a dip during the late Japanese session or the early part of the European session, so that when the traders think that okay, it is better to get rid of the position before the non-farm payroll, probably the market might make further downward move after that of the non-farm payroll, that they could develop the insight, gut feel, and liquidate the long positions after the drop. And later on realize after the non-farm payroll, they try to rise the market and continue to firm up during that of the US session. From next week, we'll come across the trending move on the upside. So here on next Monday, they are expected to make the week beginning false move, followed by that the rise, swing and rise moves in the case of Euro and GBP, also in the case of USD and USD CHF. Alternatively, they will continue to gain them, and we'll be able to see that they are making contrarian move in order to handle the crosses. Now, with regard to the levels in which the currencies are expected to swing, so Euro did not come to that of 1.1050, but it came down to 1.1114 as the low, and then started gaining the level. But as well, it has not gone up. And today, probably after that of the non-farm payroll, it could go to 1.12 or 1.13 level. And then from next week onwards, we should be able to see that it continues to climb upward. In the case of GBP, it came down to 1.3102 and is holding around that, and they're expected to slowly gain the level and come to 1.32, and also towards close of the session they might come closer to that of 1.33 level. Next week they are expected to gain more levels, and yesterday because of the BOE interest rate decision, people might be thinking that the JBP has made that drop. But on Monday itself, I told you, based on the forecast, that on Thursday, during the European session, they are expected to make the slide. So that is how the predetermined market moves are. So we have to understand that the data release is nothing but a stimulus, or which just triggers the market, and it is not actually the causal factor for that. Then USD yen, which came down to 100.69, below that of 102, and they are just holding around 101 now, and they are likely to slowly gain the levels. And next week we could come across aggressive gain in the case of USD on the upside. Then Swiss franc, they just made the swing around that of 0.96 to 97 area, and very subdued as in the case of euro. Then Canadian dollar also, they just made a subdued move, 1.3150 to 1.30 level. And Australian dollar also just made a very nominal gain to 0.75 to 7650 area. So in all, you come across that in line with the expectations, they have done it, but the quantum of gain is relatively less when compared to other weeks, which indicates that the traders have become very cautious and they want to commit positions only after the non-farm payroll. So in the absence of that, when the traders are not committing big volume, then the players are also making very subdued either way moves in the market, and it appears for the market might be range bound, and the traders will think that okay, when the market is range bound, then we can do the either way trades. Then later on, after the gain, they might take the sell positions thinking that it is going to be range bound. Then the players are expected to make the shift in trading zone on the upside in all the currencies. Now, with regard to the market reading, I have noted down the initial lows and the highs in all the four majors and two commodity pairs around 3:30 GMT. And if you compare it to that of the current market levels, that euro formed the low 1.1126 and the high was 1.1135 initially, and then subsequently they just breached it and hold it around 1.1135, which indicates that after the extended downward move, they are slowly gaining the level, and if it gains above the initial high 1.1135 and stay there for more than 30 minutes, slowly they will continue to gain the level on the upside. Then in the case of JPB, 1.3102 is the low and the high is 1.3134. They just breached the high and it is just holding around the top of the high. So here again, they just cut the high by 2 pips. In the case of yen, they just breached the initial low 101.14 and came down to 101.06 and holding around 101.0908. So they could do an extended downward move briefly for about 10-15 pips for 2 hours and then start gaining the level to go above 101.36. Then Swiss franc 0.9737 is the low, 9745 is the high. They are not breached the low, the high. Then in the case of Canadian dollar, 1.3014 is the low, 1.3035 is the high. They are not breached. And in the case of Australian dollar, okay, 0.7624 is the low and 7654 is the high. It breached the high and went up to 763 and holding around 54. So around that of the initial high, which indicates that they had done a brief upward move and then subsequently they are holding above, similar to that of the euro and GBP. They are likely to make small swing near the high and start gaining the levels. So the focus is that during that of the Euro-Japanese session, they are expected to make a small swing and slide. Then during the European session, they are expected to gain the level. So they are likely to gain before and after that of the non-farm payroll, the levels. Probably a small dip they could do around 12:30 GMT. That will be a great buy opportunity. After that, they are expected to gain more quickly the levels and continue to gain during that of the year session. And these are all the trade recommendations I just want to give you. And you can try it in a demo trading platform. keep the buy limit order 1 pip above that of the low set, because it appears they may not be able to, they may not breach the low, and they are slowly holding and gaining the levels. And you can keep near that of the low, initial low, the buy order, and keep about 75 to 100 pips away the exit order, because after the non-farm payroll they are expected to make an upward spike. And if the going is good, you keep stop at entry in that buy, and then continue to rise your exit or take profit level, and also you try to move a trailing stop in a profit making position. That way you'll be able to maximize the profit. Then in the case of yen, you can just take a buy position around 111, 101, and they are likely to gain the levels. So current levels, it is holding. Once the 101.06 has not been breached for 30 minutes, you can take a buy there, and later on they are expected to gain the levels. So these are all the market timings. So Japanese, European, and the US sessions. In between sessions, you come across the gap time for 30 minutes, and between the days, a gap time of 4 hours is seen. And each session is subdivided into early, mid, and the late sessions, and the timings are given here. And also they handle 2 pairs at a given time, and also with the help of the net change, find out what they are trying to do it in the market. Now you find the euro and GBP are showing positive net change. Fine, USD gain, weakening move. Japanese yen also showing USD weakening move, but USD CHF is showing positive net change as a USD gaining move, which is a contrarian move. This is mainly to gain the level in the case of GBP and Euro, GBP CHF, Euro CHF, etc. Then also you come across the commodity pairs are showing positive net change. Australian dollar is showing USD weakening move by showing positive net change, and USD CAD is showing positive net change, indicating USD gaining move, which is again a contrarian move among that of the commodity pairs. So in the absence of big volume coming into that of the market, because many of the traders will commit positions only after that of the non-farm payroll. So here the players are expected to make small swing, and after that of the non-farm payroll, they are expected to gain more levels. So I'll come back on Monday and give you the forecast for the next week. And also today, by 11 GMT, I'll be giving the call before that of the non-farm payroll release. That is by 12:30 GMT. By 11 to 11, between 11 and 11:30 GMT, I'll try to review the market using the live market code page and see what sort of trades you can do for the non-farm payroll. I'll also try to give the entry level before that of the non-farm payroll, so that you can keep orders and keep the hedge order to limit the risk, and modify and take the positions in the market depending upon the volatility. And also by 14:30 GMT, I will come back again and review the call, what I have given it, and see what happened to that of the market, so that you will be able to understand really how the trading has to be done. Okay, there is a question. Satish has got a question. Is there any significant relationship in regard to that of the movement made in early Japanese session, late Japanese session, and mid-day during Japanese session? Well, as far as the swings are concerned, we have to understand that the volume plays a vital role. Then secondly, the early European session, they set the low and the high to a certain extent. And the initial lows and the highs for the day, they set around 3:30 GMT. And normally what they do is, if they gain levels during the early session and the late session, they make a slide. Sometimes you have to follow the forecast also. Sometimes they just gain the level during the early part and continue to gain during the late part. So if the swing and rise is given, then don't go for a sell and buy trade. If the swing and slide is mentioned, then you can go in for swing and slide for that sell and buy trade. And yesterday, 40 pips mark was touched by Australian dollar in the early Japanese session, but the move happened only during US session, and the move was not very big. As I explained, that in the case of the commodity pairs, they make big moves during the early part of the week, Monday, Tuesday, Wednesday. Then afterwards, Thursday and Friday, they just lie low with regard to the commodity pairs and handle the majors. That's why I always mention that the commodity pairs lead the rally and lag behind. Recollect it, please. That's what during the European session, yesterday European session, the spike trade call time, I mentioned that Australian dollar might appear, it might make a significant rise, but it will be very, very subdued. So I'll show the forecast sheet again. So they're expected to make a swing and slide, a little bit of slide during the Japanese session. But as you see that they are holding near that of the high and breaching the high in both, the dip might be a false move towards close of the Japanese session up to that of the low or up to the middle level between the high and the low. That's how they could make about 10 pips dip and then start gaining the levels. Then swing and rise. The rise is expected to be very significant yesterday because they've done the downward spike in the case of GBP after that of the BOE, and they are expected to make just opposite upward spike in the case of GBP as well as Euro. Probably they might do it in Euro, and then GBP might follow this upward spike. Following Euro, you could come across the rise in the case of GBP. And they will say it is not due to the BOE interest rate decision, it is because of non-farm payroll. So every time they will try to give point their finger towards a particular data release or event or some speech, etc. And they will continue to change, pointing out. And we might think that they are the causal factor for the moves. As I explained, that the economic data release is not the causal factor. That is why I was able to give a predetermined forecast, even on Monday or the Wednesday, without knowing what BOE is going to do about it. So keep in mind that the events are used only as an attribute for such moves in the market. If there are any question, you can ask me. Otherwise, I'll just conclude the webinar. Okay, no question is coming. So I take this opportunity to thank FX Trade for the facilities to provide the webinar, and this is being recorded and displayed in FX Trade and live video and also in YouTube. So you'll be able to view it. And also I thank you for your presence here to listen to the webinar and trying to fine-tune your trade and trying to earn money from the market. So I feel really happy as a teacher if you are able to see profit in your trades with a perfect understanding of the market. So please don't be carried away that I am against any technical or fundamental analysis. It is, if the market is not manipulated, really the fundamentals and technicals will help us to a greater extent to make money from the market. Unfortunately, it is manipulated. It's a man-made market, so they are able to easily manipulate. In such a situation, then the players create the market sentiment, make us to follow either technicals or fundamentals, and then simply reverse the market and say that, okay, the market has moved down because of fundamentals, but moved up because of technical. That is how they do the interpretations, and we vulnerably get trapped. So I do not want the followers of my forecast to get trapped in the market. That is why I keep coming and giving the forecast for those who are interested, so that you will be able to really get that benefit out of the market. Wish you all happy trading. I'll come back by 11 GMT and give the trade call for that before that of the non-farm payroll. Wish you all the best in your trades.